Ladies and gentlemen, good day and welcome to the Uravi Defense and Technology Limited, formerly known as Uravi Tea and Wedge Lamps Limited, Q2H1FY25 earnings conference call hosted by Kirin Advisors. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ganesh Nalaude from Kirin Advisors. Thank you, and over to you, sir.
Thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of Uravi Defense and Technology Limited, formerly known as Uravi Tea and Wedge Lamps Limited. From management team, we have Mr. Neeraj Gada, Managing Director and CEO, and Mr. Siddhant Gada, Executive Marketing. With that, now I hand over the call to Mr. Neeraj Gada. Over to you, sir. Thank you.
Thank you, Ganesh. Good day, everyone. I warmly welcome you to the Uravi Defense and Technology Limited conference call for H1 financial year 25. I am delighted to have the opportunity to share our progress and results for the first half of this fiscal year. Before diving into specifics of our quarter two performance, I would like to provide a brief overview of our company and business model to set context by our discussion today. Uravi Defense and Technology Limited, which was formerly known as Uravi Tea and Wedge Lamps Limited, is a prominent player in the automotive lamp manufacturing sector, recognized for our expertise in crafting high-quality incandescent advanced lamps under our esteemed brand name UVAL. We are dedicated to providing tailored lighting solutions for both original equipment manufacturers, which we recognize as OEM, and aftermarket, that is retail segment. We offer them a wide range of products, including stop lights, tail lights, indicators, wedge lamps, halogens, and LED headlamps. Our extensive distribution network across India and strategic collaboration with leading LED filament lamp manufacturers in China have positioned us for growth both domestically and internationally. These partnerships underscore our commitment for delivering cutting-edge solutions to meet evolving customer needs. We are an IATF 16949-2006 certified and adhered ARAI standard and EMARC certifications, reflecting our commitment to quality, which are very high in current OEM standards. While exports and aftermarket segments currently contribute to 3 to 4% of our business, we see immense growth potential in these areas and are strategically expanding our reach into South America, where Indian brands have established a strong presence. In line with our diversification strategy, we have successfully entered the defense and power sector through the acquisition of SKL India Private Limited. This acquisition enables us to develop power supply system for extreme environment, critical for military defense systems and guns. We expect these segments to generate 15 to 22 crores revenue by year 2025. Furthermore, we are exploring the EV charging solution business for all type of vehicles and actively developing components for EV two-wheelers. Notably, we have created a prototype of T10 LED lamps for speedometer illumination and are working to strengthen our presence in retrofit LED aftermarket segment as well. To drive growth, we are targeting 10% revenue increase in financial year 2025 by deepening relationship with our existing customers, approaching new OEM, developing new products, and seeking strategic technology partnership to venture further into LED space. Our expansion into eastern and southern market is set to enhance our dealer distributor network, significantly. We shall take a closer look at our financial performance for Q2, that is H1FY25. During Q2FY25, we achieved a total income of 11.19 crore with an EBITDA of 1.56 crore, reflecting an EBITDA margin of 13.95%. Our net profit for quarter stood at 0.35 crore, translating to a net profit margin of 3.09 and EPS of rupees 0.30. For H1 FY25, we recorded a total income of 22.49 crore with an EBITDA for 3.36 crore and an improved EBITDA margin of 14.95%. Net profit for first half amounted to 0.79 crore, resulting in a net profit margin of 3.52 crore and EPS of 0.71. These results underscore our focus on operational efficiency and strategic growth initiatives. Looking ahead, we are committed to building on our strong foundation and pursuing opportunities in both automotive and defense sectors. Our roadmap includes expanding our product portfolio, including EV components for all EV manufacturers in India, strengthening our presence in LED segments by developing advanced products for international partnerships. Additionally, we are exploring new product opportunities, particularly in South America, and further integrating defense solutions into our portfolio to achieve revenue diversification. Furthermore, we are actively exploring overseas acquisition to enhance technology growth in various segments, aligning with our strategy for long-term growth and innovations. These initiatives, combined with our emphasis on quality, innovation, and strategic growth, position us for the strong performance in financial year 25 and beyond. In closing, I would like to express my heartfelt gratitude to all our stakeholders for their unwavering support and trust in our vision. Your commitment continues to be driving force behind our growth. With that, I am pleased to open the floor for questions and discussions. Thank you once again for joining us today and for being an integral part of Uravi Defense and Technology Limited's journey. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participant, you may press star and 1 to ask a question. The first question is from the line of Naina Jain from LK Capital. Please go ahead.
Good afternoon, sir. My question is, how do you view your current net profit margin and what measures are being taken to improve it?
Thank you, Naina. Thanks for the question. What we have done, if you closely look at the Q2 results, we have been able to reduce lots of expenses in this, and the actual effect of this will come in December and March quarter. There are several measures we have taken, like improving efficiency, reducing cost, reducing our energy cost, and developing lot of production and diverting lot of production in our other units where we have lot of cost advantages. This we have done. So I can see that the year end of 25 will have a sustainable and very nice profit margin. Thank
Okay,
you.
sir. My next question is, can you provide a breakdown of revenue contribution from OEMs, the aftermarket and export markets?
So currently we are doing somewhere around 95% of OEM sales.
Okay.
We have about 2.75% of aftermarket, and rest is export. Now these exports are also an OEM exports, And what we are doing, like we took part in couple of exhibitions in South America, and there we are expecting to have a breakthrough of first consignment in coming few months, because there are a lot of formalities we have to do. So once get is done, then I think we will have a significant export rise in South American retail market.
Okay, sir. My last question is, what is the current position of the company and how will it support the upcoming investments?
As you are very much aware, we have already raised funds and through which we have acquired SKL India Private Limited. What we are looking at is SKL's numbers are going to be as per our assumptions while we were acquiring this company, and this is going to add an healthy numbers to Urvi's final consolidated balance sheet. Business-wise, Urvi is also having a standard growth what we expected in last year for incandescent lamp segment, and taking over these efforts and all the measures to reduce the expenses and improving profitability and adding consolidation of SKL will have a healthy numbers for Urvi in this financial year end. Thank you.
Okay, sir. Thank you.
Thank you very much, Naina. Thank you.
Thank you. The next question is from the line of Aditi Roy from Patel Advisors. Please go ahead.
Congratulations, sir. My question is, are there other acquisition targets under consideration to further diversify the business?
Thank you, Aditi, for your questions. Yes, of course, as we have raised funds, we are already looking at many opportunities, and we are taking a lot of data and visualizing lot of companies for future acquisition. And if the opportunity and synergy is there, then I think, of course, we are open to look for new acquisitions as well. Thank you.
So my second question is, what are the key growth drivers for achieving the 10% revenue increase target in FY25?
In FY25, our core focus was to have a linear growth in incandescent lamp with approaching new OEMs, which we could do by increasing our SOB in couple of OEMs, which in final result you will see that Urvi has taken the growth. And the consolidation, as I said, SKL performance will also add to Urvi's numbers, and which is going to be our diversification and growth-oriented strategy. Thank you.
So I have one last question. How does the company plan to capitalize on the growing demand in the South African market?
I'll correct it that it's the South American market. South African market we have to yet venture, because in Nairobi and Nigeria, in Kenya and Nigeria, it's a huge market. But currently our focus is on South American market, for the reason that Hero and Bajaj both have their plants in South America, Venezuela and Brazil, and they are manufacturing huge number of two-wheelers there. And being part of OEM supplier, our brand is known in South American countries. So we participated in couple of exhibitions and introduced ourselves, and we could establish couple of connections for distribution network. And as I said, we are undergoing some process and approvals. Once it is done, then we will start exporting to South American markets. Thank you.
Okay, so thank you, sir. That's it from my side, and congratulations once again.
Thank you very much, Aditi. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Abhay Sharma from JC Capital Partners. Please go ahead.
Hello, sir. Am I audible?
Yes, very much, Abhay ji.
So my first question is, how does the aftermarket business contribute to profitability, and what are the plans to grow this segment?
Mr. Abhay, see, aftermarket business is a time-taking business, because once you have to establish a huge network of dealer and distributor and create your brand name, create your presence in the market, and then the actual profitability comes. So successfully, since last 2 or 3 years, Uravi has established a good network throughout India and Nepal, and now you can see UL brand lamps off the shelf all across India, which has given us significant presence as a brand value, and which has opened a door for UL to introduce many other components, automotive components like LED headlamps, maybe wipers and horns, which we are trying to incorporate in our portfolio. So these kind of opportunities are there, which will add to our profitability by adding to revenue, as all our network is already established and people are known to brand UL for their quality and OEM presence. Thank you.
Okay, sir. So my next question is, how does the acquisition of STL India position Uravi in the defense sector?
Thank you, Mr. Abhay. See, Uravi has identified our government's policy of Make in India and was looking for some good companies and venturing into defense, because that we could identify as a future growing segment apart from green energy. So STL acquisition will help Uravi in growing in terms of defense, where we can supply our power supply systems to all defense ancillary units which are catering to Government of India. And our contacts in automotive will allow us to introduce SKL to companies like Tata Motors and Ashok Leyland for their Tata Advance and Ashok Leyland Defense as well. So that is the synergy we could identify. Thank you.
Got it, sir. Thank you. That's it from my side.
Thank you very much.
Thank you. The next question is from the line of Rachna Sharma from HNI. Please go ahead.
Hello. Am I audible?
Yes, Rachna ji, you are audible.
Thank you so much, sir, for providing me this opportunity. My first question is, can you elaborate on the benefits of partnerships with Chinese and Philippine LED manufacturers?
What we are anticipating, Rachna ji, is next, after 5 years, there would be major LED market for automotives. Currently, it is in four-wheelers, but after that, it would come to two-wheelers and EVs as well. So there was a need of gradually establishing a supply chain for LED as well as technology to produce if required in India. So strategically, what we have done is we have had an understanding with a company in China, where we can have a supply chain of LEDs as a raw material and technology to produce a finished product in India and cater to Indian market. So as a first step, we have started developing a speedometer LED, which we have been successfully given samples to couple of OEMs, and we are awaiting the results. Simultaneously, for aftermarket, due to that partnership, we have been able to get a finished LED headlamp product and supply to our aftermarket distributor network. And what I am looking is, after 2 years, we will be able to establish a much bigger business in LED to OEMs and aftermarket, and if required, we have a line open to produce in India with technological partnership of China and Philippines both. Thank you.
Okay, sir. So my next question is, what is the expected timeline for launching EV chargers and tapping into the EV ecosystem?
Thank you for the question. See, EV chargers are technically already developed by us, and EV chargers which we have been talking about since long has been in the process for a while. However, the EV market is yet to be very much mature in technological front, so there are a couple of changes coming after every month, and which we have to incorporate in our charger and again give for testing, or again we have to test in-house. So, through the company where we are developing this, again some new models have been tested and they are being under testing. So, definite timeline, I think by January 25, I'll be able to give you the definite timeline for the implementation and production or revenue generation of EV chargers in Uravi. Thank you.
Okay, sir. And so my one last question is, are there plans to develop proprietary defense technologies or products in-house?
See, once we have acquired a company who has a good reputation in defense, there's always a door open to look back, do some backward integration, or have some proprietary technology development for Uravi as well. It may come as in terms of another acquisition or some identification of market and which we can do backward integrate. And as Uravi has enough resources in terms of land building and funds, so I see a good opportunity in near future or maybe in future where we can have such advantage of acquiring or entering into defense segments. Thank you.
Okay. Thank you so much, sir, for patiently answering all my questions. That's it from my side.
Thank you, Rachna ji. Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Sakshi from Green Capital. Please go ahead.
Hello. So my question is, are there any specific government incentives or programs that the company plans to leverage for the growth?
See, as we grow, there are different kind of programs or opportunity comes where we can be a partner of government or take part of such benefits or such schemes. But currently, we don't have any schemes in front of us apart from venturing into some green energy project, which we are not thinking at present. But given a choice, we will do that. But otherwise, in defense, we are striving to be one of the most valued partners for all government defense organizations where we are already having a presence, but we want to be a preferred choice. That is our target. Thank you.
Okay, so I have one more question that what are your long-term plans to expand the product portfolio into EV and other high-growth segments?
At present, currently we are consolidating with SKL's product and which we are trying to develop some more product for SKL in terms of power supply and segments like alternators and other things which are part of the finished product. That is in SKL what we are doing, and we may have some opening in that in coming years. Simultaneously for EV, as I told, by January 25, I'll be exactly knowing what will be the required and when we can start our actual EV, maybe two-wheeler or four-wheeler EV charging modules working commercially. And in long term, what I'm looking at, there is enough opportunity in Make in India defense where we have identified many things where we can work and supply not only in India but all across the world by making it in India. So I think the details can be shared once we have some firm work on that.
Okay,
Thank you.
I have one last question. What is your vision for Uravi Defense and Technology Limited over the next 5 years?
What we are targeting is, our first target is to have a consolidate crossing 100 crores in couple of years. Consolidated, I am repeating again, and with a very good margin. And later on, we are also looking into venturing into some sort of new development in defense as well as automotive, which if the technology is available to us, then I can have a good scope of that also. But that only will happen if there is some concrete things developing in that area. But certainly we are exploring our opportunities in defense and automotive synergies. And I'm expecting, and I'm very hopeful that it will happen. But our certain target is to cross 100 crores in 2 to 3 years. That is our first target, which we try to achieve by developing a scale business and having some growth in Uravi as well. Thank you.
That's very great, sir. Good to hear, and all the best, and thank you. That's it from my side.
Thank you very much. Thank you very much, Sakshi. Thank you.
Thank you. The next question is from the line of Niswanti from Cogent Finvest Private Limited. Please go ahead.
Yeah, thank you, sir. Thank you, sir, for the opportunity. My first question is about our SQL acquisition. So, what is our current stake in the company? Could we acquire the whole 100%, or we are yet to acquire? I'm sorry, in case it had already answered, pardon me. Am I audible? Hello?
Ladies and gentlemen, we have lost the management line connection. Please stay connected while we reconnect him. Thank you.
Okay.
Ladies and gentlemen, thank you for patiently holding. We have the management line back on the call.
Sorry, it got disconnected. May I have name again and question, please? Thank you.
Yeah, this is Yashwanti from Cogent Finvest. So just wanted to understand on our SQL acquisition. So initially we acquired around 55% plus percentage there, right? So just wanted to understand whether we could increase our stake in the company. Is it now a 100% subsidiary of our company? Please pardon me if you've already answered this question.
I will answer that. Currently, we are holding 47.39%, and by November end, we will be holding 50.01% of 50.01% of SQL currently. And our first target will be to get the growth of SQL to a certain level, and eventually we are open to acquiring more percentage in SQL because as it will, the decision will be taken as per the opportunity. But since we have just acquired 50.1%, our first target would be to have SQL's growth by having a Uravi synergy with automotives. So our first target is that. Thank you.
Yeah. So, with regard to that, up to this 50.1%, which will be by the end of November. So, what is total investment we have done till date, assuming this our stake at a 50.1%?
Once we acquire 50.01%, I think the exact numbers are not, but somewhere around 12.5 crore rupees will be invested.
12.5 crores.
Yeah.
So FY20.
47.39 is already being acquired.
Okay. Okay. So approximately 12 crore we already invested, and the company has reported around 20 crore of revenue as on FY24. So what was its first half contribution, sir? And have we accommodated the numbers in our accounting?
Since the transaction happened on 25th of September, we could only add around 4 lakh rupees or 4.5 lakh rupees, maybe numbers I'm not sure, but 1 week's profit of SKL only. So the actual number of SKL consolidation will appear in our 31st December. Yeah. Yes.
Okay. So approximately at the company level of SKL, what is the revenue which we might have reported as a whole? Not our stake, but as a company, how much it would have
SKL,
reported?
I think we did around 11 crores revenue for September, and with 2.5 crore of net profits.
So up to September or in September?
Up to September. Total revenue by SKL, what was when we acquired was 22 crores yearly.
Yes, 20.2 crores as per the year. So almost 10 to 12% growth we can see in the SKL.
Yeah, and being a defense company, the growth, last year we had general election, so a lot of projects were delayed by 6 months. So the actual number will come in next year when all the projects will start rolling out,
Right.
And in SKL, we have received one, which announcement we will be doing formally. We have received one order from L&T Defense, which is for 244 guns.
Okay.
So that production is the major production is going to come in next year. So the figures for next year SKL will be much bigger than what we'll have this year.
And what is the monetary term for this 200 guns order? Just for the single order?
The order value is somewhere around 26 crores.
26 crores. So it will see a huge impact with the one-time order.
Yes, of course, ma'am, of course.
Okay. And exactly they are into what in SKL, what exactly we do for the guns? We manufacture the whole gun or we manufacture the components for the gun?
Sorry to interrupt. See, we don't manufacture any finished product.
Okay.
In SKL, what we do is we supply the power supply system. Now, whenever there is some sort of guns or tanks are being made, they need power supply because they don't have a power supply to launch missile or launch a rocket or drop a bomb. So for that, they need to have a power supply. And in SKL, we have a power supply system supplies to all these defense units where our engines are capable of running. First of all, they are very compact. And secondly, we have a range where our engine can perform from -20 to +50. And that is the temperatures. And, we never know where the guns are deployed. If they are somewhere in Himalayas or somewhere in desert.
Right.
So this is the main USP of SKL, where we are compact and our engines can perform in a wide, extreme temperatures. Thank you.
Okay. And this 26 crore of the approximately order book which you said for that for the gun which L&T is placing 200 guns you said, right?
Yes. Somewhere around 200 plus. Yeah.
Yes. So this 26 crore of contract is only for the power supply, right?
Yes, ma'am. Only for power supply. The entire value of the order must be very high, which we don't know.
Okay. And sir, just wanted to understand now we are supplying components and then the power supply to the defense. Right? And as we already have a strong presence in the automobile and plus few more industries. So what is the contribution you can see, may not be now, but maybe at FY25 level or 26 level, how much the defense would contribute to your overall revenue and what our traditional business would contribute to the overall revenue?
If we consider 26, then I am expecting defense will be, in terms of revenue, will be around 50% of Urvi's current revenue, 70% of Urvi's current revenue. But profitability will be much more because of the type of business is different and margin levels are different in both businesses.
And then what is the growth you expect in our traditional business, like supplying to the automotive and other industries?
Automotive lamps, we are anticipating a growth of around 8%, 5 to 8%. 8% in this year, and maybe once LED will start, then the growth will be more in double digits, ma'am.
But why is it a single-digit growth, sir? Because the automobile still, though the growth has been tepid, but still automobile is still running at a good rate. So why only the 5% or the 8% growth we are seeing it for the automotive segment?
First of all, ma'am, we are doing only lamps for automotive, and automotive is a vast like LMV, HMV, two-wheelers, EVs. Now, EVs, you compare YOY, then you can see a double-digit growth, and maybe you can see a 50% growth for something. But actual revenue, when you see, it's not much. Compared to two-wheeler industry in India, the urban growth is less, rural growth is more, and which if it grows like this last festive season was good and rural growth was nice, then we may have a double digit in Urvi also. But since I am being little bit conservative as always, I am expecting around 5 to 8% growth for this year, ma'am.
And we supply these lamps to all the core segment, that is two-wheeler, passenger vehicles and the commercial vehicle, and now the EVs also, right?
Mainly our business is two-wheelers only. Four-wheelers are almost converted into LEDs, where four-wheeler and their consumption is very less. Now you can imagine India is manufacturing average 1.5 million two-wheelers per month. I am talking about average, and about 100,000 EVs. Whereas four-wheelers are hardly somewhere around 300,000 a month. So there's a huge difference in volume. So our focus is on volume, and as two-wheeler industry will grow, the Urvi will grow.
Okay. So in one of the earlier participants, you were talking about, you are talking with the Tata and Ashok Leyland. So, just wanted to understand that we are directly suppliers to this OEM, or we are the suppliers to the tier 1 suppliers of this OEM?
Yeah, of course. You very correctly said. It is always through tier 1 because we are supplying part of the finished product. So tier 1 will taking care, but of course all the recognition and the product validation is done by OEM. So OEM knows Urvi very well, but it has to be routed through tier 1.
Okay. And in that case, as we are moving, as you said, the margins on the defense is higher side. So in the first half, we reported the margin of around 15%, for the H1 I'm talking about, around 14.95, so almost 15%. So going forward, what kind of a range as an investor we could see for Uravi?
Somewhere around 20%, ma'am. 20 to 22%.
20 to 22% at the EBITDA level, right?
Yes, ma'am. I am talking about consolidated, ma'am.
Okay. And again, pardon me if you already answered me. Just wanted to have your outlook how we are developing ourselves as a EV charger business. How are our progress, or how are our studies over there?
EV chargers, we have been working very hard since last 1.5 years, and unfortunately or fortunately, the market is maturing, technology is maturing, so maybe our investments on that EV charger front will be done actually as the product matures. So there are a lot of changes are happening, the models are getting revamped. I will be able to tell exactly what will happen to our EV chargers in maybe next investor call in January.
Okay, but then we are doing it at an in-house level, or we are looking for some acquisition or the collaboration for this technology?
It would be both ways. What we are targeting is acquiring technology and producing in-house, ma'am.
Okay. And what kind of investment outlay you are proposing for this segment?
So that's what I'm telling. It depends upon the product and the mature. Yeah. So if the product needs something which is totally automatic, then investment will be bigger. If it is a semi kind of thing, the investment will be less. So the details will follow once we know what the products are being required or needed by OEM, because there are a lot of safety standards and a lot of other standards in size and everything has come. So that we have to look into it, and then only we can decide.
Okay. And sir, in terms of our traditional business of this automotive lamps, and now we are also supplying this LED. So what is the individual capacity in both this segment? And again, we are supplying the power system to the defense equipment. So what is the capacity? And currently, of course, the power system is to the scale, but what is the current capacity and what kind of a utilization level we are at currently?
Thank you for your question. Now, incandescent lamp would be somewhere around utilizing 70% of its installed capacity, but we do have contracts for outsourcing and which we can take up to the unutilized capacity. There may be some spare capacity of 20% more by utilizing those sources. For SKL, we have a capacity of 30% more, and we are already looking for the expansion and acquiring new land and building for furthermore. But currently, SKL has a 30 to 40% spare capacity.
Okay. But almost 60% utilization it is already have.
Yeah, 50% less. So we are already looking for some land and building for expanding for SKL for the products like alternators and some more engine components.
Okay. And then what kind of a capacity you are looking for SKL to have those new
Somewhere around 5 to 7 crores.
Okay. And that will be funded to, can it be funded for the internal or you are looking for the funding?
100% internal.
100% internal. And currently, there is no need of a capacity expansion as per our traditional businesses because we already have. But then you also mentioned, you also mentioned that there is a requirement for the outsourcing. So are we looking into taking to those outsourcing contracts or how is it? Or you wanted to focus on our own clients currently?
No, we have some capacity which we have identified which can be utilized for manufacturing to be transferred there, but that has a process and it needs OEM approval. But we have identified the source, and once if we don't have enough capacity, then we can always trigger that source, and that can be used to have an additional revenue for us.
Okay. And so my last question on SK, sorry. Now, how about, have you taken over the management or still the senior and the board level management will continue with the SKL, the original management? How are the things happening over there? And how much of the staff of SKL we are retaining, or how the thing at employee level, at the senior, at the board level as well as at the employee level?
The staff of SKL is retained from 1% to 50%. Whatever is the person, each and every staff is retained. Uravi has already joined management level. Being a very technical line, our partner in SKL or who was owner of SKL, Mr. Bhatia, is taking care of all the technical styles so far. Marketing, we have started involvement, and administrative has been 100% taken care by Uravi now.
Oh, that's really good, sir. I wish you all the best and see you in the coming investor call for more details. Thank you so much. All the best.
Thank you, Yashwantji. Thank you very much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions from the participants, I now hand the conference over to Mr. Ganesh Nalawade for closing comments.
Thank you everyone for joining the conference call of Uravi Defense and Technology Limited. If you have any further queries, you can write us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference.
Thank you very much. Thank you, everybody. Thank you.
Thank you. On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.